Welcome back. You're watching Stock Watch with me, Zinati Guma, and joining me to unpack your stock-related questions tonight are Mutooni from Sanlam Investments and Sanelisiwe Tofile from All Weather Capital. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. Quite a lot of optimism that we saw in the Resources 10 complex today, even though overall the all share was, trading was basically subdued and all the other indices were down. What, Sanelisiwe, we're starting with you. What fired up those resources? Was it the trade data that we got out of China or something else?
I think you'll notice that a lot of the larger part of the move was in the platinum sector, and you'll know that the platinum sector has been in a bit of a subdued period over the past sort of 6 months to 12 months, and that has a lot of factors to it, ranging from auto demand and the issues around platinum oversupply and everything else. But I think today, the main thing was probably around, the bounce in palladium, which is obviously part of the PGM mix. So that's helped some of these miners, especially the platinum miners. And I think that kind of centers around, probably the main thing is the US Fed just mentioning that, there probably will be rate cuts at some stage this year. So that's likely going to, I guess, help support the US economy in any case, and probably the global economy as an extension. So I think it's probably got something to do with that, but also the fact that, like I said, these shares and the platinum sector in general, the platinum price, the commodity prices have been weak for quite a long period of time. So you would expect them to, at some stage, show some kind of revival.
Well, actually, just talking about the markets, the Rand has actually been quite strong. There's a question here. Rand remains relatively strong even after a dismal current account. Banks were given an okay by Moody's. Why then the drop in bank shares today, Roy?
That's an interesting one. I think if I start with the Rand, current account deficit was weaker, so that generally puts pressure on the currency, but the Rand was stronger. And I think you have to look outside of SA for the answer to that. And that's basically where the dollar is. So the dollar index, which is basically, which is a measure of its value relative to its big trading partners, has actually been weakening from about 104 to around 103, which tends to put a bit of a base on the Rand. So the Rand strengthening is a function of dollar weakening. Why is the dollar weakening? I would say the dollar is weakening because there's greater confidence in the global economic growth relative to the US. So what the Fed chairman said was they're relatively confident about the strength of the US. They don't need to cut rates, but they think they will cut later on. So that's a very benign statement. That's a statement showing a lot of confidence, which means that a lot of the money that had gone into the US figures it's risk on. Let's go looking for returns in other places, and that's what weakened the dollar effectively. How do banks come into this? It's that risk of rates coming down eventually. It basically confirms that interest rates have peaked, and what we're doing is looking down. There've been places to hide for high dividend yields and everything. Now you want to go where the action is.
Yeah, very, very interesting. Thank you for that perspective, Roy. Let's go into Pick n Pay. Any thoughts as to why Sean and crew haven't finalized the rights issue? The stock is in a death spiral now. It's like a vicious feedback loop. They don't price the issue. Okay. I don't know what's happening with that sentence. They don't price the issue. Stock drops lower because we don't know where they will price it. Okay, I'm not exactly sure what that means. But sadly, so let's come to you with the finalization of that rights issue.
Obviously, a rights issue is quite a contentious thing at times, and especially when you have to, fund a business such as Pick n Pay that's been in. I suppose the kind of some of the core corporate stores have been in trouble. It's a matter of, I guess, getting sort of certain shareholders over the line. Obviously, the the family, the Ackerman family, has got a meaningful stake in sort of the mix, so they have to kind of also be part of the people who approve the rights issue. So it does become complex when you have to get shareholders and everybody in agreement as to whether the rights issue is the right thing. So I mean, these things sometimes do take time. I mean, it is pretty clear that Pick n Pay is in sort of, as the question somewhat alluded to, in a bit of a spiral, struggling stores, a bit of a debt issue, and they do need to somehow to come out of this. And obviously they're not trading so well, especially in the face of like a ShopRite, who is kind of gaining market share and taking market share from the likes of Pick n Pay. So, getting shareholders over the line to agree that even after the rights issue, that this the viable business is the other thing. Perhaps that's why some of these things become sticky.
Well, actually, on the share price, I finally figured out the sentence. English has just come back to me. So they don't price the issue. The stock drops lower because we don't know where they will price it. So, Roy, is this delay also adding to the headwinds of that share price?
Yeah. So typically when people announce rights issues, they tend to announce them and give the price.
Yeah.
Because they've got a good idea of how much money they need to raise. And what you do is you divide, you get that money, divide it among the shares, and you know what price you're going to. But now what these guys have done is they basically said, yes, there's a rights issue coming. So the share price has dropped. So suddenly, because it's a lower share price, you probably have to sell more shares. So that increases the depression on the share price as people anticipate. Everyone will do their calculations. ShopRite will come out with results. Things will get negative. The share price drops more. And people suddenly realize, okay, yes, even more shares have to be issued. So that's the problem. And I think the listener's quite right that what you do in this situation is you typically come out and say, we need some cash. We figure the best way to do it is a rights issue. We think the rights issue should be priced at this level, and this is the timetable. So you get all of that news at one time, and you tell people it's underwritten, so it means at a certain, you're pretty sure it will all be placed, and then everybody's got confidence and the share price doesn't fall further. The market doesn't like being drip fed. That I think is the bottom line.
All right. Talking about the bottom line, Sanlam came out with results today. There's a question here. I've held Sanlam for about a year with a gain of 21%, which isn't too shabby. Still a stock to hold on to, or are there headwinds in the offing? Sanelisiwe?
Yeah, I think the Sanlam result was solid. Obviously it's a business that is firstly somewhat market related, and then obviously they've got the kind of sort of macro related business with regards to premiums and making sure that they can actually grow new business and continue growing. But I think, like I said, the result was solid. We have some green shoots with new business being positive. But then, we think, it's probably trading at a level that is expensive relative to the other insurers. You've got insurers like Old Mutual and even Momentum trading at deep discounts to embedded value, whereas Sanlam is probably trading in and around embedded value. So, in my opinion, you probably, if you are looking for good value, you probably want to go to the likes of Old Mutual or Momentum. But I mean, the Sanlam is still a quality name, quality management, conservative in all their assumptions, all their actuarial assumptions and the likes. So it makes them, the most robust out of the peers. But I do think it probably is a little bit more expensive than peers.
Yeah, quite interesting, because that insurance sector has largely been touted as unloved by investors, and I guess that's maybe what you're speaking to, as you mentioned, Old Mutual and Momentum. Roy, is it a surprise that Sanlam is backing that trend or not?
I don't know whether it's fair enough. I don't know whether it's fair for me to answer that question. But what I will say is the share price has rallied over the past 1 year, and it's done really well relative to the other insurers. What you've seen is it's a quality business. They've done a lot of interesting things, both on the short term and on the life side, particularly with Allianz and that sort of thing, and the Moroccan JV and all of that. So they've put together a pretty good, solid business at a time when insurers were out of favor. So I think what investors have done is they've picked Sanlam as the high quality play and stuck with it through time. I think I'll stop there.
Yes, sometimes the dots connect in the middle of the conversation. I'm like, okay, yeah, Sanlam. And I'm like, Epsa, okay. Let's go into more questions. There's a question here on transaction capital. The stock price increased above 10 Rand. I actually didn't even see that it was above 10 Rand at this point. Will the price go higher as the volume also increases after the announcement of the We Buy Cars deal, Sanelisiwe?
Well, I mean, look, I don't know if it goes higher or lower, but I can speak to kind of the business itself. And obviously the share price has bounced because of the fact that they've announced the kind of separate listing of We Buy Cars. Obviously, We Buy Cars as a standalone business is likely to attract a more appropriate kind of valuation rather than what it has now, with all of the kind of SA taxi problems weighing down the whole group. I think that's the main principle around why the management have done this, to kind of separate this relatively good business out of the kind of remaining stuff that's a bit noisy. And the prospects for We Buy Cars, I mean, look, it's still a growth business. I mean, management have still got targets to keep on kind of growing in the used car segment. There does seem to be a bit of demand relative to new cars, because new cars do tend to be expensive. So there is a bit of a business case for We Buy Cars, and I think it's up to investors then to decide how much that is worth. Obviously, clearly, it's worth more outside of the transaction capital group than it is inside the transaction capital group because of all the noise. I think that's why the share price has recovered meaningfully over the past few weeks.
Yeah, well, actually, I mean, Roy, just how much upside do you think we could see with transaction capital with this, obviously, the developments of unbundling We Buy Cars?
So it's quite complicated, and I think what investors are basically trying to do is to get in on the action early.
Yeah.
Basically, they want to get the We Buy Car shares as part of the unbundling rather than the listing, and they think they're going to get it cheap. You have to make a lot of assumptions for that to work. It's very clear there's lots of people doing it. I think the valuation question here is not just about We Buy Cars. Remember, We Buy Cars will get listed and you hold it as a share. What happens to the balance? The balance that has SA taxis and all of the other things that made us all worried about transaction capital. You have to have a view as to that valuation, and even more importantly, you have to have a view as to its tradability when you take out this one valuable share. So maybe the share price, I don't know, for argument's sake, goes up another 20%. You get your valuable shares out, then these others tank. I'm not saying that's what it's going to do, but I'm saying investors must think that way. You can't think one way, that I'll get a valuable share and this doesn't matter. It's very important to think about both perspectives. And I think the share price rally is probably not considering both sides of the pendulum.
Another unbundling is Rainbow. The question goes, is Rainbow Chicken going to be a good buy? Yeah, of course, being separately listed from RCL Foods. Roy, for me, I don't know, I was quite surprised because chicken is a very tough business. We've seen with Astral, Quantum Foods and all of those. So yeah, just talk to me about your thoughts on this separate listing and if you would be nibbling or not.
So from the RCL perspective, I think between sugar and chicken, they had lots of cyclicality, and their original premise was that they wanted to be a stable food group, right? So it's natural that they figure Rainbow Chicken is easier to unbundle first than the sugar. Now, Rainbow Chicken used to be listed a long time ago before it went into this group. And it's being listed now at a time when we've seen all of these things happening in the chicken industry, whether it's avian flu, the investigation, and the variety of things. I think what you're going to see here is the ability to compare them to the industry standard, which is Astral.
Yeah.
When they come out and you look at their numbers, you'll be able to tell which one is, I mean, how close they are to Astral, what they need to do to get themselves to that level, and also how they differentiate themselves. So it's actually a relative call. You already have a view and you've seen the trading track record that Astral has put together. Now you'd have to extrapolate and see whether you think Rainbow can match that or beat it. So for us, I think it's the variety more than anything else, and the variety of stocks coming on listing and being able to compare them and being able to challenge each management team with what you hear from the other, which always does. I mean, that's always good for markets.
Yeah, very, very interesting, the timing here, as you know, the markets are still absorbing all those headwinds in the chicken business. But I mean, RCL has really been working on a rainbow chicken for the last few years, in getting its strategy on a solid footing. Sanelisiwe, do you think that maybe that will put them in, a solid state to be able to list properly and actually get appetite from investors?
Yeah, look, the thing that you have to remember about, I guess, the chicken or the poultry business is that it does tend to be quite cyclical. You spoke about timing as well with regards to the time of the listing. And if you just look at the share price for Astral, for example, I mean, it is kind of been on a bit of a downturn over the past while. And that speaks to obviously some of the challenges that Astral are facing on the production side, whether it's load shedding, whether it's the water issues, also speaking to some of the increased feed costs, as the soft commodity prices have been elevated over the past while due to all the inflationary pressures we've seen around the world. So, the timing will remain to be seen as to whether it is the right time. When, as Roy has mentioned, when we've looked at RCL in the past, we've also looked at all these factors and decided it's the right time to buy or sell. And like I said, there's been a few headwinds in the sector up till this point. So at some point, history tells us that those headwinds will turn. And I can't say for sure if it's right now or if it's 6 months from now or a year from now. I mean, inflation has moderated quite a bit, but you are still seeing a lot of call it noise around the stock commodity prices, and that kind of those remaining relatively elevated. So it might be a challenge for RCL to print, or Rainbow Chicken, the unbundled Rainbow Chicken, to print any sort of good numbers in the short term. But longer term, it could be that it kind of benefits from the cycle.
Well, as we're talking about corporate action, let's move on to MultiChoice. I'd like to know the panel's thoughts on why MultiChoice is trading significantly lower to Canal Plus's revised offer of 125 Rand. Roy?
I think it's as simple as you have to apply a probability of timing and likelihood of the deal happening. This is a deal that is fraught with a lot of regulatory approvals and regulatory interventions and things, and it's not going to take 6 months. It's probably going to take a year, could even take longer than that. I mean, you've seen the Vodacom deal, which was announced about a couple of years ago. Vodacom and Massive still is on the go. So I think what investors basically are doing is they're saying, listen, we think we've got a valuation. We've got an estimate of timing, and we're present valuing it today. And in that present value, we're also including the probability that this will actually happen. So that's why it's lower and not higher.
Well, actually, just on that as well, Canal's revised offer is only 25% above MultiChoice's original listing price. Does the panel think this is a fair value or a steal for Canal? Sanelisiwe?
Well, you'll have to to answer that question, you have to kind of look at the operations as well, right? I mean, it's also a secret that, MultiChoice operates in Africa, firstly, and we've seen a lot of headwinds in Africa. I mean, there's a all the currency issues across some of their operations in Africa. So that means that they're actually earning less rands when you translate those. And then also, if you consider the fact that, you know, there's been a gradual decline in sort of the typical multi-choice product subscription over the years. And so the business may have changed in nature from the time it listed in terms of operations and kind of the prospects. But they do have other things in the mix that are positive for them, like the new Showmax and the relationship with Peacock and the likes. So you have to weigh those in. So the answer to the question is that, you know, the business is different from when it listed. So you can't anchor on listing price. You have to weigh what the prospects are right now.
All right. Well, talking about prospects, Sun International released its trading update today. There's a question, your view on Sun International since that came out today? Was also interesting is that they said that they expect their headline earnings per share to surge by up to 92%, but then there was a difference in the growth with adjusted headline earnings per share. I think one of the reasons was the money that they're paying for Piedmont. Roy, what did you think of that trading statement?
Well, I didn't go through it in any great detail, but what I would say about Sun International is they're playing in the right field. As you can see, even from Stats SA data, that side of the economy seems to be continually picking up. Accommodation and leisure side of the economy is picking up. Their decision to invest in Piedmont consolidates their positioning in that gambling industry and improves the outlook into the future. So I think it's a reasonable play. I think it's a solid management team that has a very clear idea about where they're going. But the absolute details of the trading update, unfortunately, I didn't quite get there today.
It wasn't a lot. Sanelisiwe, your thoughts on Sun International and their prospects at this point?
I mean, I think similar view to Roy. I mean, one thing I'll mention is that just there seems to be a nice tailwind coming in the travel and leisure sector. You've seen a handful of the names there in that sector doing quite well. I mean, was initially the pent-up demand post-COVID, and then, you know, kind of people kind of returning to traveling even internally. Obviously, we see kind of the demand for tourism and travel opportunities in Cape Town, for example. So any business that's exposed to that region will also do well. So there is a bit of a tailwind in the sector. So that's why these shares, including Sun International, have done well in sort of the recent past.
All right. Well, gents, let us get to your stock picks for today. Roy, what are you picking?
My stock pick for today is Bidvest. I think during difficult and uncertain times like this, what you want is to bet on a management team that has very clear focus on their strategy, able to manage their costs, and keeps executing. This is a group that 6 or 7 years ago said they wanted to have an international business, and they started it from scratch. Now it's about 30% of, it's about 22% of group operating earnings, and it's a formidable business with #1 positions in some of these markets, in Singapore and in Ireland as well. So they've executed incredibly well. And when you look at the core business in SA, despite the lack of GDP growth, they've been able to eke out higher margins, generate cash, and grow earnings, despite all the difficulties there are in their core industries. So I think this is one of those ones that you buy and lock up for the long term.
All right. And sleep most of the time. Sanelisiwe, what are you picking today?
So you spoke about banks earlier, and my pick today is going to be Nedbank. I think they produced a solid set of results. I think it was Tuesday this week. I think there's a bit of a fear that with declining rates, the top lines of the banks might, or potentially declining rates anyway, the top line of the banks might suffer a little bit. But I think there's going to be a big offset from the kind of impairments or credit losses coming through. You saw it in the Nedbank results that the credit losses came down. So I think the banks will benefit from an improving consumer sort of strain, I suppose, from the high interest rates as interest rates go lower. And then obviously, two other things on Nedbank is that they've got kind of a new CEO coming in who might kind of refresh the strategy and kind of perhaps change the trajectory. And then also it's cheap. It's looking attractive from a valuation point of view relative to the other guys. So I think Nedbank is a good place to be for now.
All right, thank you so much for your time and for your analysis today, gents. That is all for tonight's Stock Watch. Thanks to our guests, Mutooni from Sanlam Investments and Sanelisiwe Tofile from All Weather Capital. Up next, the close. Stay with us.